All right, welcome everybody. You should be able to see my screen and hear me. That always helps, right? So make sure you can do that and let us know in the questions area that you can do that and everything is working okay. We've got a good turnout today. Not bad considering 1 week before the holiday. So just as a reminder, next Wednesday is the 25th, so that's Christmas Day. So we're not going to be here that day, obviously. But then we'll pick it up the week after, of course. I've got Jean here today, and she's going to come on with an announcement. I want her to tell you about the tutorial we're going to be holding here in February, and she'll be sending out an email on that, but I thought she could talk a little bit about it. So Jean, take it away.
Well, welcome everybody. Happy holidays. How's everybody doing out there? One thing too, Bennett, I believe next Wednesday we will not be here for Christmas, and the following Wednesday we will not be here because it's New Year's Day. And
so we got a double.
I know. So the other thing I did want to mention to everybody is that we are going to be having an amazing tutorial, live tutorial with Bennett for 2 jam-packed days on February 2nd and 3rd. So we'd love to have you come join us. I've always seen it happen. This is the event that gets people to go to the next level, because there's something about one-on-one exposure to Bennett and having him brainstorm with you on what to do with your trading and investing really helps you to move to the next level. So we'd love to have you join us. I will be sending out an email, and keep an eye out for that. And Bennett, with that, back to you.
All right, thank you. Oh boy, exposure to Bennett. That sounds like kryptonite or something. I don't know. All right, so anyway, folks, the tutorial is going to be really fun. It's going to be basically a Sunday and a Monday, and we're going to start in the afternoon on Sunday, and we actually are going to trade the Asian markets because they start opening up and get a little more active around 6 o'clock our time here. So the first 3 hours on Sunday, we're going to talk about some theory and what we're doing, and then we're going to jump in and trade the NASDAQ on a very short time frame. But a lot of the methodologies we're going to be using to trade the NASDAQ also can be used for trading any time frame, any market, because of the fractal similarity between time frames and technical analysis. So it's going to be a lot of fun. And then on Monday, we will trade all day, and that will be a fun one too. So you'll definitely get your money's worth. Jean's going to be sending that out probably, Jean, about a week or so, within the week? What do you think?
Absolutely, yes.
Okay, so keep an eye open for the email because they fill up pretty quick. How many slots do we have, Jean, total this year?
8.
All right, yeah, that's going to fill up pretty quick. So if you don't get an email from us and we say it's gone out, then definitely let us know or call into our office. All right, great. All right, so any questions now you have for today, go ahead and type those in the questions window. As Jean just reminded me, not only are we going to not be here next week, but also we're going to not be here the week after because that's New Year's. So you guys get 2 weeks off. Okay, so there you have it, all right, vacation. But anyway, you can always email support@traderscoach.com if you have any up and coming issues as well. All right, so let me just jump in and go through these administrational items I have to do in order to satisfy webinar rules and regulations. And the first one, of course, is our disclaimer. Like I always say, without risk, there is no opportunity, and it's so true. You just need to know how to handle risk. You always need to trade with an appropriate trade size so you're not freaking out. You also want to be trading with money you can afford to risk, called risk capital, and run anything by your financial advisor before acting on it, anything we discuss here, because I don't know your personal situation, they do. And things like age, net worth, tolerance to risk, your current investments all come under that heading, so to speak. So, and past performance doesn't guarantee future performance and all that kind of good stuff. All right, I'm going to put a link up once again. I like to do this every week just to put this in front of you. If you're interested in day trading, I highly recommend Apex Trader Funding. I use them. I have several PA accounts with them. and I trade them actively every day. And this is the kind of stuff I'm going to be teaching you how to do also in the tutorial in Tucson. But you know, you can do really well with these. You just got to understand the rules that they incorporate, but they aren't really that difficult once you understand what they are and have an edge. Trading, you know, all this stuff sounds great, but if you don't have an edge, if you don't know how to trade, forget about it, okay? So the first step is learning how to trade, and then it can all fall into place. So I think that's really important. And, you know, it takes a little bit of work, but great way to make money, I'll tell you that much. But anyway, I put a link up there. You can get a discount on the various subscriptions they offer, and they give you free data, which I think is great. So if you don't have futures data already, they give it to you, and you don't have to pay for it. All right, so was on the phone, or actually Gene was on the phone today with the Wiley team on the release of our new book, the second edition. So it's all done, 608 pages. So it's a big boy, and it's going to have an accompanying website with some cool material on it, which is what they were working on today. And it is being shipped. So Gene, when is it actually shipping out? See if she's
I think
still on.
Amazon says it's going to be, if you order it right now, you get it the very first week of January. So if you order it, you get right in, you know, for the initial launch.
Okay, cool. Okay, cool. So yeah, so you know, there's a link on our website. If you go, I think under educational material, there's a link for books, and you can order it there. I'll put some links up in the recording as well, but it's pretty easy to find. And that's the second edition. Don't order the first edition. I don't even know if you can order the first edition anymore. Is that still available, Dean? Do they still offer that?
You know, I'm not sure, but the material in the second edition is far superior, so I highly recommend getting the second edition.
Well, obviously, but I just didn't know. I'm going to take this book off the screen, I think, next week. I don't think we need it up there anymore in the first edition. All right, so anyway, then I got books on money management, Elliott Wave, so forth and so on. All right, software here. If you have our software, you can always add on to it. We've got not only the ART software, but the OWL, PTF, TLM, and ERI. We've got scanning software. We've got risk control software. So again, I'll put a link up in the recording. You can check that out.
And then Sam has a question on the software. Sam,
no, I understand that. I'm going to get to that, okay? So I'm on my way. All right. In order to answer Sam's question, what I wanted to do is actually go into NinjaTrader. And so what Sam is asking is regards, does the signals work on Renko candles? So let's bring up Renko. As I recall, it's like, I think on the range bars, the art reversals don't work, but the pyramids do, but I'm not sure about how they work the Renkos, honestly. So let me just see. Let me see if I got it up here. Okay, so here's Renko. What Renko, what brick size do you use? 2 minutes? Give me the brick size you're interested in. I do not use Renko myself. I have used range bars a lot, but let's see what we got cooking. I'll just keep it at 2. I think that was maybe a default or something. Let's see what happens. Probably blow my system up here. Still loading, still loading, still loading. All right, let's see. Hold on. Heard a little something there. So what's your brick size on that? What if we put 10? What is it? Not really sure exactly what that would mean. So give me your brick size. They're asking for a brick size. So Sam, can you give me the brick size? Let me see if I do a new chart here. Let me just bring up. I don't want to bring up the new chart. Give me 1 second. Let me just see what I can do here. All right, so let's see. Let's get rid of first all the indicators and see if we can just get Rincos up there. Okay, so now let's go over here and go to Rinco. Candles, so you like the candles and the wrinkles. All right, and they keep saying Brooks size. Okay, so 8-4. I don't have an 8. I have a 2. So maybe you're saying maybe either 8 or 4, maybe. All right, and let's see what we got here. All right, so there's the Rincos. All right, those are awful thick, aren't they? Let me just, I think that's what the 8 means. Maybe that's too thick. Yeah, that's better. Okay, hold on. Let me go with the stand. Let's go with the default 2. I'm not going to go with that 3,000 bars back. Let's just go 1,000. All right. So let's see. Does that kind of look like what you're looking at there? Now let's add some of the software on there and see what happens. So let's put the pyramids on. For some reason, I don't think this is going to work on Rincos. Rincos is a different animal. A lot of proprietary automated systems use Rincos. The problem with Rincos is by the time you get in, sometimes you're not getting in until it pretty much confirms after the color. I've traded some of those systems and they sound good, but by the time you get in, it's not always exactly where you want to be. All right, so I don't see the pyramids coming up on that. So I'm assuming, of course, I don't know if I even loaded it properly. Let me just see. I'm not so sure those are going to work on there. Let me just see. I don't think you have the price structure on Rincos to make that work. So let's see what else here. Let's remove that. I can't believe the reversals would work either. I'd be surprised on that. Yeah. So yeah, that's no go on that. So now if we put this on just a daily chart, let's see what happens with that. Okay, so I switched it out. Give me a second. So let me go to Rincos once again here. I'll just double check it. Yeah, see, they're gone. So no go. Software does not work on the Rinco charts. Now, it's interesting, just so you know, let's load the pyramids too for a minute. And I'll show you something on here. Shoot, let me first change this back. Doesn't really matter the time frame. Okay, so let me go back and load the pyramids now. All right, and just refresh. Okay, so there they are. Okay, awful thick candlestick bars. Let's drop that down to about a 2. Okay, so there it is on a 2-minute time frame, not without a problem. Now, let's see, when we go to range bars, you should see the pyramid staying, but the range art reversals go away. See, so that works on a range chart, but not the art reversals don't, because the art reversals require some calculations done on time intervals. When you're talking about, things like range bars. They're not time-based, okay? All right, so Sam, I think the answer to that is no, big guy, okay? Here, let's see if I can find Tesla again. Okay, oh, I've got this one still on. Oh, now that's Renko. Holy cow, maybe not. That says Renko, 10 Renkos. Maybe it just took a long time to load. Let me just make sure. Yeah, maybe it just took a long time to load. We weren't patient enough. All right, let's see one more thing here though. Oh, sorry, I want that. So I stand corrected. I don't see the reversals on these though. So that's kind of like range charts. That was interesting. All right, I stand corrected. So the pyramids work on the Renkos. Of course, the indicators will work fine on that. Interesting. Now let's drop it down to 8. And yeah, okay, no problem. Actually, they work pretty good, don't they? Yeah, not bad. Okay, Sam, okay? That was kind of fun to look at that. All right, so let me change that back to the daily chart. So I'll get all screwed up on that. All right, let's see what else. Frank, Ben, what is your assessment of the market today after the large sell off? Yes, let's look at that real quick. All right, first thing, let's take a look at the Dow here. All right, so we had this, you know, basically a channel selected for this uptrend. And yes, we did go below it here. So this was kind of a big deal because this represents also the trend line. We are still not on the weekly chart below the major trend line, but this was a kind of a move down. I'm not concerned about it that much right now. Let me just remove this. We went below one support area based on the pyramid. Okay, we got another major support here, another one here, another one here, and then a very significant one down here. So what you could certainly have is a more serious correction based where it should end, almost where it is now, but it could go a little lower to the 45.22 area. So, and I would think we probably will go below this liquidity level here at the very least. So I'm thinking, you know, a pullback in there. So what I'm really anxious to see on this is what happens after this kind of slows down, and it will slow down. And then you get the reversal. The reversal, if it goes to the mean of the distance between here and here and comes back down and takes out this low, that's a big deal, okay? Because that's a major change in structure. So at that particular point, that would be classified as a downtrend on the daily chart. We've already got a downtrend on the 60-minute chart, but that would definitely be classified as a change or break in structure, as they say. I think it's setting itself up for that. So I would say let's wait and see. I've seen many a times where we pull down into a profit-taking area, which is what this would represent, and then we get another high. Okay, that's possible. Now, with that said, as you all know, based on all my analysis and things that I've been sharing with you off and on over the last year, we are in a major target zone for a top on the Dow, as well as some of the other markets as well. So we do kind of have to be paying attention to when we get a slide in the market, how much of a slide develops. And one day does not necessarily mean the slide is going to last for very long. Now, what's interesting over here on the S&P 500, notice here we had a red PTF that formed in November down here on the 60-minute chart, indicating that we were going to take that low out. And so, you know, that looks like we're going to head back down. So I don't think we've seen the bottom on this pullback yet, but it'll be interesting to see what we see, you know, after the rebound here, and then see what kind of follow through. Okay, so that kind of thing. All right, does that, so I guess stay tuned. I think, Frank, you're in the Oracle. You might even be in the MOR too. And I will update all this stuff over the weekend, regardless of the holidays. You know, I always update that. So we'll have the latest information if you go to those areas and look at what I'm thinking, okay, based on the market activity itself. I will tell you that this was a tremendous day. I happened to be on the right side of this market when I was trading a 2-minute time frame on the NASDAQ, and it was a quick 60 points. So it was a good day trading that. But in terms of now what's going to happen, I would say at this particular point, let's see what happens after the pullback on this, and you'll get it. But both these are bearish price bars. I mean, if you look at the weekly and even you look at this, all right, the weekly is still unfolding, so that really doesn't count. But this daily ended, and that's a bearish price bar. So when you see a bearish price bar like that, the high probability trade is to the short side with a stop above that. Okay, some people will say, well, geez, my stop is so far away. Well, unfortunately, on the high probability trades, the stops are usually far away. It's just the way it works out. But that is a trade worth taking because the chances of it going down again is high probability. So I think probably we got another good day or so more to the downside, and we'll see how that ends. Any questions on that? It's kind of a fun one to look up today. Go over to the NASDAQ. I can't think there's going to be too much difference in the NASDAQ, same type of thing. But you see, even the NASDAQ, if you look on this weekly chart, you see we're in the target range. Now, what does that target range mean? Well, it means that based on the bull run that we've been in since 2009, that's right, 2009. So, I mean, 15-year bull run. Do you think we're due for a correction or a bear market? I do. But, you got to follow the market. And so the market here is still going up. Yeah, this was a sell-off day. This may, all big sell-offs start as small ones. So who knows? Maybe this is the beginning of something bigger. But by the same assessment, all right, I think on the weekly chart, it's too early to tell. And even on the daily chart, it's too early to tell. But that was a nasty bar down today. Okay, so we'll see how far down this thing goes on its next level. And I've given you the chart already, Frank. If you go to the Oracle area, you'll have the key levels of support. And I don't think we've taken all those out yet. Okay, so keep an eye on those. But we'll update that. So we'll see what happens with that. But once this bull market does finally end, you're going to be talking about a significant bear market. And so this is not going to be a little correction when it happens. It's going to be based off a 15-year bull run. So you're probably talking about a 50% retracement on this stock market at some point. Maybe some people are even saying more, and it's possible because the FIB could go down 61%. I can tell you one thing personally, and again, you need to talk to your financial advisor. I would not be buying at these levels any long-term holds right now. I'd wait for this black swan correction, so to speak, to happen, and then step in and buy the bargains when nobody else wants them. You know, we saw that again in the financial crisis. Remember, Bank of America got down under $3, and people still weren't jumping in right away to buy it because they were afraid that, you know, the banks were done because of the bad mortgages. And of course, that was exactly the time to buy it, and you would have made a fortune if you did. The same thing will happen again, because it always does, in the stock market during this next bear market. If you let it play out and don't panic, and when you get to the bottom, just step in and start buying. Okay, you'll make more money that way than if you bought now and tried to had to hedge all your positions. So you know, meet with your financial advisor, have a game plan on any of your long-term holdings. I gotta believe a lot of you are sitting on a lot of profit, and maybe they're in an IRA, so you don't have a tax consequence, but you need to get with your advisors and find out if you want to sell any of that stuff if this thing does end up going into a bear market at some point. And I do think it will happen probably within the next few months or 6 months. It's hard to say exactly when, but you know, be prepared. That's the thing, because you can hedge those things if you don't want the tax consequences, but try to have some cash on board so you can take advantage of the lower prices. So you might want to sell out of a few things now, keep that cash off to the side and play it that way. Okay. Hopefully that helps. Okay. And Frank says he's short the QQQs. Let me see if I can type that in correctly. Okay. Well, you were short yesterday. Oh, you're sweet then, Frank. All right. You should be good for probably another movement down, but you'll probably also get a retracement. You could get a retracement up to 528 before it goes down again. So I would just keep it short for now. All right. Anything else? Anybody else? We never know exactly what we're going to talk about on these client supports because it all depends on the questions that come in, which is why I think that's great to have it that way. Was anybody else day trading today? Anybody day trading the NASDAQ today? Sam, you're very welcome. Hopefully I answered your question. Looks like the pyramids work, Sam, but the reversals don't, I think, on the Renko charts. All right, everybody getting ready for the holidays? All right, good. Well, if there's no more questions, I think we'll go ahead and call it a day, okay? Let me see, something else might just to come in. Did I get Gene a Christmas present yet? Frank, he's online. I can't say anything about that. Every day is Christmas, right, Gene?
Oh, every day is Christmas for sure.
There you go. That's the right answer.
Hi, Faye. Good to see you.
Yeah.
Merry Christmas.
Hi, Faye. How are you? Yeah, Merry Christmas, everybody. Happy New Year.
Yeah.
You know, whatever you celebrate, have a great one with your family. And
Yep.
Main thing is enjoy it. And even take some time off from the markets, okay? Step away from the markets. Come back fresh in January. And if you can, try to make it to the tutorial in Tucson here. The weather's perfect that time of year, by the way. So I even got some people I think that are going to be coming, bringing their golf clubs. A lot of golf.
Yes, a lot, actually.
Yeah.
Yeah.
I think John's bringing his golf clubs.
Yep.
But anyway, I'd love to see you, and I'll make it worth your while. It'll be a great session because when you trade the live markets together, okay, it's a whole different thing than doing it, you know, digitally online. All right, so let's see what we got here. All right. Okay, I think that's it. I think I got them all. All right, so listen, happy holidays. So I guess what I'll have to say is I won't see you till next year because the next time we will be back it looks like it'll be the 8th of January, right? The 8th of January. So we'll see you all back then. All right, so have a good one, and we'll see you next year. Bye-bye.